I want to talk about reverse mortgages today. I said I promised I would do a better job educating our community, and I want to educate everybody on this call so you can educate the community as well. Recently, I've been sitting with seniors, and it's sad. Like my heart snapped watching them trapped in their house. Inflation has chewed up their fixed income, and they can't even afford to buy groceries. So they can't leave their house. They're not enjoying their golden years, and they're going out backwards because these credit cards are at 30%, and it's just chewing up everything. It's chewing up their financials. And so doing a reverse mortgage, you know, can make sense, like paying off that mortgage, paying off the credit card debt, and then they get a line of credit, which Jonathan will get into if they have it, and that line of credit is growing. Right now, it's at almost 7% a year. So it works in their favor and gives them some financial freedom. But before we get into that, if you haven't signed up for our AI agent class, we were at an event last week where there were 340 realtors in a room. I went to another one where there were like 70 realtors in a room. We had 57 agents sign up to do the full in-day person class. So what we're going to do is we're going to have a realtor come in. She's out of Columbus, Ohio. It's going to be 8 hours. We're going to serve you a fantastic lunch. You're going to walk out of that class with your own AI agent working for you, whatever that looks like. And so if this is something you're interested in, please put your name, your phone number, and your email in the chat and get signed up, because I don't know how many seats are left. We're going to advertise it for the remainder of this month, and then whoever's in is in. And the reason we're asking you for that information is because she's got to get you on a platform to get you set up so that the day you show up for that event, you get the most out of that event. And she's been doing these all throughout the country, and she's helping agents grow their business. So just imagine if you had an assistant that was consistent and did the right thing every time, and then all your time is spent just working with your clients, right? How much more effective could you be? Not only more time with your family, but more effective with your clients in the time that you're spending with them to help you grow your business. So, like I said, we got pages of people that have already signed up. I think it's 57 people. So please drop your information in the chat, and then we'll get you signed up to attend that class. And then I'll give you more details on it later. So for now, I think it's going to be in February. I'm not saying the day because somebody's going to hold me. We may end up changing the date on that. So it's in February, and it's going to be in South Point, Canonsburg. But having said that, we got Jonathan on here. He's with Longbridge. That's who we do our reverse mortgages with. And he's going to talk to you a little bit about reverse mortgages. We want this to be a relaxed atmosphere. So if you have questions, just throw your hand up and he'll be able to answer them. And we just want to make sure everybody knows this. And I think, if I'm not mistaken, Allegheny County in Pennsylvania, where we're at, is the second oldest community in the country behind, I think it's Miami-Dade, Florida. So how many seniors are in their homes that have equity that could be living a little easier, but they have no idea and they're not educated, or no one sat down with them about what reverse mortgages are? And so when I sat with a couple seniors just recently, they're like, Jeff, how did we know about this? And the thing is, they don't have cell phones. They're not on Facebook. They're not on YouTube. All they had was a phone on the wall. And not going to lie, I was jealous. My cell phone didn't even work in their house. Like, I'm like, this is exactly where I want to be. I want to grow a beard, have a house where my cell phone doesn't work, and just own a rotary phone. So like, that's the goal. Like, people have goals. That's my goal. But Jonathan, have at it. Educate us on reverse mortgages and how we can serve more families.
Okay. So to start, I'm going to apologize for my voice up front. As I was explaining to Jeff before, I was at our National Reverse Mortgage Lenders conference, our annual conference last week, and I was talking for about 4 days straight. Lost my voice, it came back, and then last night I was at my son's sporting event and lost it again. So I'm kind of in and out a little bit today, so just bear with me. I've been in the reverse mortgage space. I entered into it in 2002. I had a small broker shop here in Metro Detroit, and we focused 100% on reverse. So I jumped full in after spending about 2.5 years in the normal mortgage space, or what we refer to as the forward mortgage space. So us reverse people call the normal mortgage industry the forward world. So 2002, I focused on retail. I was originating reverse mortgages. I was sitting in kitchens all over Metro Detroit. I was working with a small team. We were doing marketing. We were working with real estate agents. We were working with certified aging in place specialists. We were working with financial advisors, banks and credit unions, QSOs, and everywhere we could to try and drum up business. As you can imagine, 2002, reverses were less known than they are today, if that's possible. So people really had no idea. And we were working with a little bit of a different generation, which was called the greatest generation at that time. And now the shift has gone towards kind of the baby boomer generation because the tailing edge of the baby boomers are now turning 62. So there's this huge wave of homeowners that are baby boomers that are looking at what to do next. They're looking at how do I afford to be able to stay in my house? How do I pay for my groceries, as Jeff mentioned? They're looking at right sizing. We don't call it downsizing because a lot of times when people move at an older age, it's not necessarily into a smaller home. It's just a different type of home. My parents did it after we all left, all the kids left the house. They moved out and got a little bit of land and they got a house that was almost the exact same square footage. It was just spread out on a single floor. So instead of it being a two-story colonial, they ended up in a ranch style single-story home. They still had the same amount of furniture and everything else, so they had to what we call right size for what they wanted in retirement. So we have all of these people that are looking for solutions, looking for ways. Do I keep my money in investments? Do I cash it out? How do I afford to make monthly payments? Am I going to go into a condominium? Can I make HOA payments? Can I afford the HOA payments? It's a really complicated situation. And if you're not aware of all the solutions or all the options, or at least aware of it enough to have that tool in your toolbox, you're not going to be able to answer those questions. And for financial advisors, if there are any on here, or if you're a real estate agent or a loan officer and you're working with financial advisors, a lot of them don't like to give advice into the reverse mortgage world, but it's important that they understand it enough to be able to be educated in a conversation with their borrowers or with their of who they're advising. The last thing you want is to have somebody ask an advisor what they think about a reverse mortgage, and they say, "Oh, well, that's that thing where the government, they take your house, they steal your house, or you give up all the equity in your home and you're left with nothing at the end." Because that is not the truth. And unfortunately, sometimes when people respond that way, people start to question what they know about some of the other things that they're advising on. So today I wanted to focus a little bit on the reverse for purchase. Are you all okay if I kind of do a screen share and what we'll do is we'll keep it informal. I'll run through some slides. I know it's not the favorite thing everyone likes to do first thing in the morning is get on and have somebody just talk at you with a bunch of slides, but it'll help us get through some of the basics and then we can jump off and just have a discussion if that's okay. That works.
Yeah, that
Oh,
works.
I need to have screen sharing ability again. If for some reason it took it away.
Jenny, can you give him permission?
If
Yep.
not, we
One
can just
second.
chat.
Um,
So we're going to talk a little bit about the
where am I
reverse
doing
for
here? Hold on.
purchase and what that means. A lot of people don't understand. Well, let me back up while she's giving me permissions. The most common reverse mortgage done is a refinance. A lot of
Um,
people, when they reach out, are having issues making their monthly mortgage payment, principal and interest payments. So a lot of times where the loan initiation starts is a borrower, an older borrower, is having some issues making their payments and struggling to pay bills and everything else because we're on fixed incomes and everything's going up in costs, groceries and everything. We all know that it's going up in costs. And they
no,
need
no,
to
no,
find
no.
some sort of solution that will help alleviate some of those monthly obligations and make it a little bit more comfortable to be able to age in place and be able to afford to stay in their home. So a lot of times they start in talking to their children, talking to their trusted friends, coffee, church, whatever it might be, and they'll see ads on TV. Some of them are pretty cheesy. We've all seen them. They always have a senior sitting there that looks like they're in disrepair and they don't know what's going on and they're lost. And of course, there's an ad about some greatest thing ever. It's a mortgage with no payments. It's free money, free this, and it comes off kind of cheesy. But that's usually how they start to get the information. So it's important that you understand the mindset that they're going through when they're coming to you eventually and asking you questions. So a lot of times they go to children and the children will do a little bit of research. Mom and dad aren't necessarily online. They're not on social media. They're not necessarily on Facebook. More of the baby boomers are starting to get there, but we still have a lot of baby boomers that are sharing email addresses. They don't use all social media. Maybe they're on Facebook or LinkedIn or something like that. And they'll eventually find somebody that they'll reach out to. And a lot of the experience that they have for the first time is they're reaching out to somebody that has no idea, or they're going through their circle of influence, their sphere of influence. So they have a mortgage guy they know, or their financial advisor that they know, or a real estate agent that's helped sell them a house or help their kids buy a house. And that's who they go to first. So you will inevitably be those people that someone's going to come to first and start asking questions. So just having the basic knowledge of, hey, this is what I know, but I can find out more for you. I can go to Jeff. I have all these other people in my resource, in my toolbox that I can go to and find out information to answer some of your questions and get you some answers. It's still not giving me permission, but that's okay.
I,
So on the
Mr. Jeff.
bottom where it says share, there should be a little
Yes.
like
Yep.
pop next to it that says allow multiple hosts or allow multiple in the bottom middle.
Did that work then?
Let me see.
Um,
Yes, it worked.
okay.
Okay.
Oh, perfect.
Sweet.
Oh, okay. Reverse mortgage for purchase. So that's leading me to this part of the conversation. Because we have a number of real estate agents, I want to talk a little bit about the reverse mortgage for purchase option. Reverse for purchase is not necessarily just another product that you're offering to the same database of clients that you've been working with. This opens up the door to a whole new set of clients that you may not have even been thinking about that are looking at doing a purchase or right size or whatever you want to call it. So reverse mortgages are usually often misunderstood, as I mentioned. They can be great for funding a new purchase because it allows them to qualify to purchase, just like in a normal mortgage transaction, where you might get an 80 LTV. In the reverse mortgage world, it might be a less LTV. Maybe we're talking 50% towards the purchase price. But it's allowing homeowners to buy a home and have half of the financing covered by a reverse mortgage that requires no monthly mortgage payment. There is no payment. That's the benefit of a reverse mortgage. There's never a monthly payment. You can make a payment if you choose to do so, which will basically go into a line of credit that has a growth rate applied to it, and inevitably you can pull it back out and use it in the future. But the goal is to be able to buy a home using a financing option that has no monthly payment. Most reverse mortgages are done for borrowers that are 62 years old and older. This is the FHA version of the reverse mortgage. It's called a home equity conversion mortgage, HECM. You'll hear people say HECM, which is a horrible acronym, but that's what it is. That's been that way for 20 plus years. So you'll hear people say HECM instead of like a HELOC or something like that. We also have proprietary options that are designed for 55 plus and older borrowers that lend between about the $500,000 home value all the way up to a $4 million loan amount. So this is designed for what we call jumbo type reverse mortgages. When borrowers look at using a reverse for purchase, most commonly where they're getting that down payment isn't necessarily from savings or investments or anything like that. Typically is when they sell their exiting home and they receive the cash from paying off whatever mortgage they still had remaining and taking that money along with the reverse mortgage, and that becomes their new buying power to go purchase a new home. So for instance, if they were to sell a $500,000 house and they had a $100,000 mortgage or a $200,000 mortgage, they're walking away with $300,000 or $400,000 in their pocket. They may want to go buy something, but they're not able to buy something for $300,000. What the reverse mortgage does is say, okay, we're going to take that $300,000 and call it your down payment, but we're also going to lend you an additional $300,000 towards the purchase. So now you're looking at buying a $600,000 home, maybe in a community that you want. Maybe it's a single story, like I said, maybe it's a condominium. and it allows them to go in and buy something maybe a little bit more than what they would have been able to buy if they had paid cash only, or if they had used conventional financing, a 30 or a 15-year fixed rate loan with a monthly payment. They may not have been able to qualify for enough. They don't have to make payments, but they have an option to pay on it if they want to. They still have to pay their property taxes and insurance, and they still have to pay HOA fees if they're in a condominium type community. I'm not gonna read all this. We're just gonna go through and kind of summarize it, and then we can do questions, and I can share this after the fact if anybody wants a copy of this. We just talked about them getting additional spending power, buyers to enjoy flexible payment in the future. Monthly principal interests are optional, improving cash flow. So again, the whole point of a reverse mortgage is designed to not have monthly payments, but some choose to continue to make payments, which are applied to a line of credit, and it charges up this line of credit and it lowers their principal loan amount. So if you make a payment, whatever dollar you put in is lowering your loan balance and it's increasing this line of credit. And if the interest rate is 6%, the line of credit's growing at about 1.5% higher than the interest rate. So you'd have a 7.5% growth. Now it's not interest, it's just a growth rate. Because in interest, if you have $100,000 and you have interest and you borrow that money, you don't have to pay it back. In a reverse mortgage, it's a growth rate that's allowing you to tap into more and more of the home's equity. So if the loan grows over time and you draw that growth out and use it, that becomes part of your mortgage balance, which gets paid at the end of the loan, whenever that may be. So buyers can make a purchase without jeopardizing their nest egg for retirement. What this is basically saying is a lot of times in situations, we have homeowners that are relocating or trying to buy a new home, and they're taking money out of their investments. They're cashing them out early. They're taking it out of their performance. They're risking things that they've designed for retirement to buy that home because the prices have gone so high that they need extra cash and they don't know where else to get it. So this allows them to keep money performing where it is. It stays with their advisor. It stays in their investments. It stays in their retirement funds. And it allows those things to perform so that one day when they do draw it out, it performs and functions the way that it was designed to do so. Non-recourse reverse mortgage has a lot of protection measures in place. Not only are there qualifying attributes of a reverse mortgage like you have in the normal mortgage industry. For instance, we do look at credit. We don't care about credit score, but we're looking at a 24-month derogatory credit. So we're trying to see if they've had any derogatory issues over a 24-month time frame. We don't care if they have a 500 score, 700 score, or an 800 score. That doesn't necessarily change in the FHA loan. For some of the proprietary products, there are credit score requirements. We don't have debt to income ratios like you have in the normal mortgage industry. We use residual income, meaning how much money do they have left over each month after we have these mandatory expenses taken out. And FHA has kind of set a minimum threshold for that. So there are qualifying attributes up front, and then there's a non-recourse feature in the future, meaning that even if the market were to crash in the future and they owed significantly more than what the house sells for, no family, no borrower, no one ever pays more than what the house sells for at the end of the loan. There is no debt that is transferred onto the heirs or the estate. There is a mortgage insurance premium fund, an MI fund, that is collected in some of the fees up front that is held with FHA. And if a loan in the future becomes short to close or upside down, as we like to say, then they draw out of that working with the lender and servicer. There's an appraisal done. They're allowed to sell it for a certain percentage less than the appraised value to make sure that real estate agents and everybody are covered. And the MI fund pays the shortfall to the lender. So everyone's made whole. Nobody is left with any kind of debt. Another safety measure up front is the counseling. There are counseling requirements on all reverse mortgages. Any borrower or anyone on title of the loan, anyone on title of the home, has to attend a one-time counseling session, typically done prior to application and disclosures. The counseling is regulated by FHA. There is a list of HUD-approved counseling agents and companies that is given to any borrower prior to application. They go and choose the counseling and do it independently before they even apply for the loan. this is a protection measure not only for the consumer, but also for the lender. If Jeff were originating the loan and told the borrowers all this information we're talking about, they go through counseling and application and go all the way to closing and go, wait a minute, nobody told me there was any interest on this loan. They'd say, no, 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 they did. Not only did Jeff tell you that, but we had this independent counseling agency that specifically went through and explained to you costs, fees, and interest on how this loan works over time. So it's a protection measure for lenders. It's a protection measure for borrowers. And it's also a way that they analyze to make sure a borrower truly understands what they're getting into before they sign anything that goes into, that's recorded and finalized.
Jonathan, can I speak to that? A couple things you said here,
Sure,
just to unpack it
absolutely.
just a little bit better. So number one, that, right? So the seniors I was sitting across from, was able to say, listen, don't take my word for it. You're going to sit with a counselor. Like, they're going to walk you through everything. That's their full-time job, is to make sure that you're not getting taken advantage of as a senior. And so I love that reassurance that they sit down with somebody that does this for a living to make sure it's the right program for them and they're not getting taken advantage of, right? And
Right.
then the other thing I'm going to share, if I can do is I'm going to do a screen share real quick, if you don't mind. When you talked, this is new, right? So this is newer for me because I used to do reverse mortgages a ton back in the day. And then this line of credit you speak of, I know you said it, but I want to dance on it for a little bit. Whatever the senior doesn't use, they have a line of credit that's given to them that grows, right? So it's kind of like an investment. I mean, I don't know if that's the right terminology to say, but I want to
It,
share with you. This is
it,
a
it,
sample. So let me know if you guys can see my screen. Can you see it?
Yep.
Okay. So
Yeah.
I just clipped this. So at the beginning, when these people close, they're gonna have a line of credit. If you see it right here, of like 41,000, right? And Jonathan, correct me if I'm wrong, man. But here's the thing.
I'm only seeing my screen, so I can't see yours, but I'm
Okay.
sure you can go ahead and I'll figure it out while you're talking.
Okay. So if they don't touch that line of credit, they don't pull any money out of that line of credit, they just let it sit. In 10 years, that line is now $82,000. You see that?
And the nice thing with the reverse is it can't be frozen. They can't take it away. They can't say you have a larger line of credit than the value of your house. If the line of credit's there, they can draw it and use it. It's available to them within 3 to 5 business days from the request time that it's made. It's wired right into an account that they choose, and that money's right in their hands.
Yeah. That's a big difference from what reverse used to be to what it is now. When I saw this, I'm like, whoa, whoa, whoa. This is an additional investment for them. So, Spatty, hear that one out, man. Like, in addition to everything you're setting them up for, they have this going in their favor as well.
And
And
besides the purchase transaction, I know I'm focusing on that a little bit, but the line of credit in itself, there are people that take out a reverse mortgage that have free and clear properties. The free and clear property is sitting there, and
mm,
people would say, "Why are you doing a reverse mortgage?" You're locking in your line of credit. So what they're doing is they're banking on the housing market today and the interest rates today, and they're saying, "I'm going to lock in the line of credit I qualify for today, knowing that I'm getting that guaranteed growth on top of my loan." I'm going to do it because I think maybe my housing market's going to cool. Maybe something will change, and I'm just not sure what the future holds. So I have a free and clear home. I'm doing a reverse. I'm locking in that line of credit. I know what it is. I get a statement every single month showing me what my line of credit is growing by. And then one day down the road, when it's time, they can contact their servicer and say, hey, now that my line of credit has doubled, I
yep,
want to convert that into a tenured monthly income now for retirement. And
yep,
they analyze it at that time based on their life expectancy at that time, how much money it's grown to, and they do a calculation and say, okay, well, you qualify for $4,000 a month guaranteed for the rest of your life, no matter how long you live. And it converts into an income which would be greater than if they waited and did the reverse mortgage in the future when they needed to do it. It's a that tool, that idea, that concept is what we preach when we get on and talk about financial. We have a financial advisor forum that we do, and there's some CE credits that we do for financial advisors as well. And that's the mindset and training that goes into that, is teaching that forward thinking in the reverse world on utilizing that line of credit to use for retirement.
yeah, because you can't spend the walls of your house. We say that all the time, right? So, like, why not put the walls to work for you and let this thing grow the way it should be grown instead of just the appreciation of the home itself? Yeah, I love it. I
And
just
there
had to
may not
stop. I had
always,
to pause on that one real quick.
no, you're good. You're good. You're fine. I like that stuff more than I like just running through slides. So I welcome anybody jumping in and asking questions.
Does anybody else have
Um,
a question right now? Let me see the chat.
how much time do we have on this, Jeff?
Usually I brag about getting people in here in 30 minutes, giving them all the
Okay.
steak, no sizzle, and then let them
Okay.
go be productive. But if people want to stay longer than 30 minutes, you're more than welcome to stay. Yep.
Okay, I'll jump through a few of these quick ones and then we can do some Q&A. There's a lot
Yep.
more slides and I'm not going to do that to you guys. So let me just get through a few more of these ones on the purchase and then we'll have a good concept of that and then we can do some Q&A and then we'll let everyone go.
Okay.
Let me know if you see my screen again.
It says reverse mortgage purchase financing.
Okay, so borrower qualifying, there is borrower qualifying. We just kind of talked about that and briefly went over it. Um, Borrowers must meet ongoing loan obligations, property taxes, and insurance. The only time you get into an issue or trouble with a reverse mortgage is if a borrower doesn't pay taxes or they drop their insurance. The servicer will send out notifications saying that they need to force place or put it on it, or potentially they could end up in a foreclosure situation. So in the reverse mortgage world, everyone that has ever talked to anyone about doing a reverse always has somebody that says, I heard about so-and-so getting foreclosed on. The only way there's a foreclosure in a reverse mortgage is if the borrowers don't pay taxes or insurance isn't really a foreclosable, but it's forced placed. It's really taxes. So if a borrower goes into tax default or there's going to be a tax foreclosure, the lender has to protect themselves and initiate the foreclosure themselves in order to make sure that they get back the money they've lent, just like the normal mortgage space. Um, how does a reverse mortgage for purchase work? We kind of went over it. Here's some quick highlights. Here's some sample numbers. So if you look at the purchase price on the top line and the age of the borrower on the left line, it's showing you how much cash is required from a borrower to bring to the purchase to the table. Now, these numbers are a little bit out of date. It's always changing. As interest rates drop, a borrower qualifies for more. As interest rates go up, the amount they qualify for is declined. If you are a older borrower, you qualify for more money because these calculations are based on borrower life expectancy. The older you are, the more you qualify for because you're not going to be living with that loan as long. There's not going to be as much accrued interest over the life of your loan.
Right.
So a 62-year-old borrower is going to get a lot less than an 85-year-old borrower. That's why it's showing the cash required to close decreases as a borrower gets older. The jumbo products, as I mentioned earlier, we lend on home values from 450 and up. We do loan amounts of $4 million or higher. The coastal communities really have the higher home values and higher condominium values that really utilize our platinum products. In our platinum suite of products, we have fixed rate options, we have line of credit options. We even have one tool that's called our Platinum Preserve. Preserve is a guaranteed preservation of home equity in the future. So what that means is if a borrower qualified for $1 million, but they only wanted to use 600,000 to pay off their underlying mortgage, they could put into the loan feature a preservation tool of 40%, which would guarantee whatever that home sells for in the future, there's a 40% equity going on to the estate. That one is a little bit more complicated when you get into it, but that is something that we could do a training for on platinum products down the road if somebody was interested. Do you have to sell your current home in order to purchase a new home? No, you don't. You can, if you have the money, you can go buy another home as long as you're going to use it as your primary residence. That's the main criteria, is it has to be your primary residence. And you can retain another home as long as you qualify for your residual income using both properties' expenses. If there was a mortgage on the exiting home, taxes and insurance, you have to qualify with that with your income. And then it has to be for the primary residence only. You can't do this on an investment property. You can't use it as an Airbnb. You can't use it for VRBO or anything like that. You have to be living in the home for the majority of the year. And the majority of the year just means 6 months and 1 day. They're not sitting there with a time clock stamping it when you exit and enter the house, but they can kind of keep track of those things to make sure that people are using it as their primary residence. We already talked about the non-recourse feature. The home has equity in it when they sell. It doesn't matter what the home's value goes to in the future. The payoff balance is just going to be like a normal mortgage. It's principal and interest. But the balance on a reverse mortgage grows because you're not making payments. Whereas in a
Right.
typical mortgage, your balance goes down because of the amount of payments that you're making. There's a document in the application called an amortization table that shows a total annual loan cost. And that represents to the borrower, when you take out a reverse mortgage and you don't make payments on it, even with interest costs and fees over the life of the loan, if somebody lives their life expectancy, because that's what it's based on, it might cost them an APR of something like 7%. That would be comparable to them going out to the bank today, taking out the same loan amount and making payments on it for the
Right.
same term at the same rate. It's not costing them more. It's just a different way of paying back the same debt. In a standard mortgage, if you went and did a 15-year term loan and made payments on it for 15 years, at the end of 15 years, you have a free and clear property. But if you add up all those payments you made over 15 years, it's going to almost equal exactly what the reverse mortgage costs you at the end when you pay it off in one lump sum after you're gone.
But
So
here's the
you,
thing, and I'm not a financial planner. Spatty's on here. The time value of money. If you invested those payments versus paying the interest on that loan, you'd have been better off
right,
financially overall with a better financial picture. Like
right.
that's the piece where we got to start educating people. And then the other thing I want to share with you is, oftentimes people are calling me going, "Hey, I don't think my parents are going to live much longer. I need to go on the title in case anything happens to them." And I'm like, "Is that the right answer? I don't know, right? Like, let's get the estate lined up now."
Depends.
True story. I got a lady who built her house in 1970. She built it, she owns it. She gets married in the late 1980s. Now, her and her husband have that property. They both have kids. They want the property to go to her kids, not his, right? That they both agree. That's what they want. If she dies first, the house goes to him.
Yep.
And then when he dies, it goes to his kids. They don't have anything in place, right? Which, I mean, I just got my stuff squared up like 3 years ago. My mom's 88 years old. She just got hers squared up 3 years ago. Like, this is the urgency that I have, so that not only doing the reverse mortgage, but making sure their wills and their estates and all that stuff is lined up as well, so that their wishes are met, right?
And
And these are the conversations. Yeah,
we can close reverse mortgages in a trust. I
right.
highly recommend it. We do it all the time. A trust is the best way to make sure that the way you want things to go after you're gone are going to be done, right? It's your way of deciding who's going to get what and where it's going to go. And usually a trust is what I would recommend. There is an attorney review of a trust to make sure that the trust gives itself the power to mortgage and that it's set up correctly and all signatures are done correctly and counseling certificate signatures. So that's usually the most sound way to make sure that it's going to be done correctly in the future.
It's so good. And then you said coastal properties.
Coastal
Go-
communities have the highest home values. That's where we see a lot of our jumbo or our proprietary. The HECM is usually, Midwest, the rest of the interior, unless you're in that 500,000, 6, 7, $800,000 and higher, you're really going to be looking at the FHA HECM, home equity conversion mortgage. That's usually going to be the best option for a consumer. The nice thing is when we collect the data points, the general information to kind of put together a proposal, we're looking at borrower's name, birth dates, estimated home value, and zip code. With that and whatever their mortgage balance might be, we can really put together a proposal of all the options that are going to be available. It goes on a proposal form where it shows here's a line of credit option, here's a fixed rate option, here's a proprietary option, and it shows them 3, 4, 5, 6 maximum on one form, different options. Now, maybe only one or two jump off the page, but you're giving them a few different options. We also have a tool that shows what 30-year conventional mortgage payments, a
Mm,
normal mortgage and a purchase transaction look like compared to a reverse. And then we also have a product that's coming out soon that's a HELOC designed specifically for the senior market 62 and over, where it allows them to borrow up to $400,000 and it can be in a second position on a 75% combined LTV. And it's an interest only payment, a fixed interest only payment that
wow.
has no term. So it's open ended. There's
Wow.
no call date or call feature. So they can live with that forever. But the idea is that they would use that to transition into a reverse mortgage at some point when they're ready. So there's
That's so good.
a lot of solutions that we have, what we call equity release solutions out of a home that are designed for the 55 plus community. It's just a market they've been told their whole lives to pay off their home and
Right.
save it for a rainy day, but no one ever
Right.
gave them tools to be able to go and access it and use it for what it's needed. When the rainy day comes, they start going, okay, now what?
Right.
What do we do next? This is one set of options to be aware of as ways to tap into that equity that's been built up in over so many years to be able to utilize it to help stay in the home, retire more comfortably, whatever it is. Some people use
And,
it for other reasons. They take it out and
and
pay for, grandkids' college. They go and travel. Those are not the norm. Usually it's paying off an underlying lien, it's purchasing a forever home or their last forever home. It's utilizing it to be able to retire comfortably so they're not, splitting cans of soup and sharing
right.
meals and
Oh,
not buying their
Mhm.
prescriptions.
And Jonathan, to your point, in 2012, I'm the youngest of five, right? So we sat around a table with my siblings, and I'm like, I told my mom, I'm like, why leave that house that are five derelicts that put you in a spot in the first place, right?
Yeah.
Like, let her live.
And
Like she's worked hard. She's 88 years old, man. She's still working a shop and save 40 hours a week.
they have
And
a
so I was,
mindset. Their
yeah,
mindset is to leave their home free and clear to their kids. But I
yeah,
will tell you, I've sat in hundreds, thousands of meetings with families and children. Maybe only once or twice I've had kids that were concerned about their inheritance. And
yeah,
those weren't the ones that were looking out for mom and dad's best interests.
yeah,
Usually they're saying, no, you guys do what you need to do. I don't care about your house.
right,
I'm not living in your house. That doesn't happen anymore. These homes used to transfer and stay in families for years and years and years, and kids would move in. People don't do that anymore. I'm not moving into my mom and dad's house, and I don't care if there's a dollar left over. If they've got a dollar left over when they're gone, then they didn't plan appropriately.
right. And then, yeah, I'm not giving nutritional advice, but at 88 years old, the last time she was at the doctor's was when I was born 53 years ago. Her daily diet is dark chocolate, Lay's potato chips, cigarettes, and decaf coffee.
That's
And so,
great.
like,
She's
I tell
preserving.
anybody, if you go to the Cansburg Shop and Save and you ask for Phyllis,
Mhm.
tell her how awesome her son is, and then buy her like a
Yeah.
potato chip or chocolate. And she goes, Jeff, these people are buying me chocolate or potato chips. What are you telling people? But it makes her smile, so it's all good. And then you say coast to coast. We have somebody in here from California,
Yeah.
so she just joined our team. MJ's on our team. She's out of California. Um,
welcome, welcome.
yeah, yeah. Do you lend in California? Can we do California, Jonathan?
Stockton?
My
Yeah,
question.
yeah. I mean, I know
Yeah,
Stockton
yeah.
does, but can we do it through Longbridge?
We're in all 50 states. So as
Okay.
Oh,
long
okay.
as the loan officers are individually licensed in those states and they have the right credentials, they can originate anywhere.
Awesome.
California is probably the hottest market in the reverse mortgage space. So if there's someone on here in California, they
Yeah.
probably see reverse mortgage information every day. I got to imagine. Florida, um,
Isn't that
California, Florida, Texas, Arizona, South Carolina, those coastal areas are very hot. Colorado, the Utah, some of those, you're getting a lot of people moving out of California and moving to cheaper areas. So they're going to the Utahs or Nevadas or things like that. Outside of Vegas, there's a lot of retirement type communities that are condominiums that are affordable, that are just gorgeous, and they have gorgeous weather all year long. So we see a lot of people relocating or buying second homes in those markets because we have snowbirds from the north, and then there's something called halfbacks. And I never knew what halfbacks were until my friend in Charleston educated me on it. He goes,
What's the
all you
what's the
people
what's the
from the
term?
north, halfback. He
Half
goes,
back?
halfback,
Hat
back.
back.
Oh, half back.
you
A
go to South
halfback.
Carolina and North Carolina?
All the people from the north that moved down to Florida and then realize how horribly hot it is all year long, they move halfway back and they end up in the Carolinas.
Hey,
Mhm.
we got the West Coast represented. We also have the East Coast too. We got Paula
Right.
Brown on here. She's from Georgia,
Yeah.
right? So she's joining our team too. So we got coast to coast on here. We're
That's a
good.
huge
Yeah.
segment of people that do that whole snowbird thing and then move halfway back. They look
Half
for reverse
back.
purchase. So they are looking
Mhm.
for that option. And they've usually been at, when they move to the warmer climates, they get solicited about reverse mortgages all the time. So when they start to realize that they don't want to live down in Hurricane Valley or wherever else that they went to,
Mm.
they'll come back to somewhere usually in the middle of the U.S. and Nashville, outside Nashville, gorgeous areas. They're all growing communities like crazy, and they're really all senior friendly because again, the baby boomer wave is going through that industry like crazy. So if you're not targeting that market or educating into that market, you're missing out on probably the biggest segment right now.
Oh, that's so good. So good. Um, any questions? Anybody have any questions here? You can just unmute and ask it or throw it in the chat either way. Jonathan,
I,
thank you so much. Yep, go ahead.
I
Who
have
said
a
something?
question.
Yeah.
I'm just wondering, so like at the end of it, how does it all work then? Because I think that's kind of
Okay.
one of the things that I've run into for
Yeah.
questions that like, let's say
Yes.
mom or dad passes
Great.
away and then I mean, do they elect somebody to kind of be their next in line to kind of deal with
Yes.
the
Yeah.
mortgage company kind of?
Yeah, so all reverse mortgages are serviced by a reverse mortgage specific servicing company. The largest in the US is a company called C-Link that's located in Lansing, Michigan. But Longbridge has its own servicing. C-Link is the sub-servicer behind it. So Longbridge has a huge servicing center in Houston, Texas. That servicing center sends out monthly statements. They deal with the borrowers all the time, withdrawals, with their families, with whatever it might be. In the reverse mortgage application, they put an alt contact, which is like next
Yeah.
of kin or next person in case of emergency
Okay.
type person. So if they find out or feel that something has happened to the borrower, maybe they moved into assisted living or rehab or passed away or just aren't responding, they will reach out to that next person either via phone call or email after they've attempted to reach the borrower a number of times. If it's an end of
Okay.
life situation or a loan and they moved into assisted living, oh yeah, sorry, we were dealing with mom, she moved into assisted living, she fell and broke her leg and she's not coming home, they will work with that person on the process of repayment. They usually have to notify the servicer within the first 30 days as to the intent. Are you going to try and keep the house? Are you going to sell the house? Is mom moving back into the house? What are we going to do? And then they usually, depending on that path, they work with the servicer, but they usually have about 6 months to either sell the home or do whatever they need to repay that debt. Because it's a call note feature as soon as the borrower has moved out permanently, as long as they moved out
Eh,
permanently. So servicer works with the borrower's family or whomever they're dealing with very closely. As long as there's open communication, there's no issues. If whomever they're working with goes dark and they have zero communication, the lender would be forced to start a foreclosure process. Or if they find out they're using the property not the correct way, which happens more often than people would think. Mom passed away. I'm going to go move in mom's house. She didn't have a mortgage payment. I'm going to try and draw this out as long as I can and have a free place to live. Now, again, not common, but it does happen. So the servicers have to kind of be on top of it and they have to make sure that they're staying in contact with the family to make sure that that whole repayment process works out. If you've heard
Mm.
ugly stories, it's usually because something wasn't going on that was 100% on the up and up, and the lender was forced into a foreclosure type situation. Nobody wants to foreclose on a borrower in the reverse mortgage space. That's not good PR. So they avoid it at all costs. So if you do see that that had happened, it usually means something went sideways.
Okay. Nope, I appreciate the explanation because I think that's kind of the question that everybody that I've talked to has had about it. It's like, what happens in the end and how do they kind of get it all finalized? So thank you.
And we do have available to, like Jeff will have this available to him as well. And I'll just show this real quick and then we can jump off because I know we're there. So this, if you're seeing my screen now, this is, you can even go to this. It's not protected. It's just www.reversedepartment.com. It is a servicing answer type website. So if you have anybody that ever calls you and says, hey, I got this reverse mortgage and I want to list my house, but I don't know what to do. The person I did my reverse mortgage with isn't around anymore, and I get these statements every month, and I called the number, and I'm not sure what to do. You can go to this, and this is our servicing background with C-Link, which services about 90% of the reverse mortgage industry, and it has common questions, common forms. You can find everything under the sun that you need to answer anything that a borrower that currently has a reverse mortgage could potentially ask. Requesting funds, payment plan changes. If you have an insurance claim while you have a reverse mortgage, maybe you help somebody get a reverse mortgage and they call you back and say, hey, Jeff, I just had a tree fall on the house and we're getting a new roof. What do I have to do with my insurance? What do I have to do with my lender? And they will kind of walk you through it. Insurance claims, lost draft, property damage. They send over the quote, the mortgage company signs it, it goes back, they release funds, all that. All of that is right here and available on this link on this website.
Thank you.
Good stuff. Good stuff.
Yep.
Any other questions?
I have a quick question.
Sure.
You had mentioned that we can close a reverse and a trust.
Yes.
My question is, if somebody has closed a reverse, is there any reason they couldn't put it in a trust afterward?
Nope, they just have to, when the trust is drafted, before it goes for recording, they send it over to the servicer. It goes in for lender review, takes about 48 hours, and it comes back, and they get more of a trust attorney opinion letter along with it that says it looks good to go with the reverse, and then they can take it to an attorney or title or whomever and record it.
Okay, great. I have a situation like that right now, so that's perfect.
Yeah, just have them reach out to their servicer and tell them that they'd like to put it in a trust, and they'll give them, it might even be on that link that I just said.
Okay,
Probably a form in there that says, if I want to put it in a trust, what do I do? And it gives them a contact and all.
perfect. Thank you.
There are a few other servicers that are out there, PHH services. So depending on where their servicing is coming from, but if they don't know who to reach out to, let me know. We
Okay.
know pretty much everybody. Just send it to Jeff, and Jeff will send
Okay.
it to me, and I'll figure out who it is, and we'll tell you where to contact.
Perfect. Thank you.
Mhm. Great. Thank you all.
Thank you for coming, Jonathan. I appreciate you,
Thank you so
taking the
much.
time to do this. And everybody on the call, I hope you got something out of this. I hope this helps you serve more families. And just know that we're here for you. So if you have any questions, just text us, call us, email us, and we're here to help you grow as well.